Hello, you're listening to Leveraging Thought Leadership. I'm your host, Bill Sherman. And today we're talking about organizational thought leadership. I've recently been thinking about the intersection between thought leadership and venture capital. And while the ideas may seem distant, at their heart, they're really both about taking good ideas to scale. I wondered what a head of thought leadership might learn from a VC. So I reached out to Jim Adler. He's the founding managing director and board member of Toyota AI Ventures. He's based in San Francisco, so he's in the heart of tech innovation. He's also working on behalf of Toyota, a company with a legendary reputation for innovation and process improvement. As you'll soon see, there's a lot we can learn about thought leadership by looking at it through an investor's eyes. Ready? Let's begin. Welcome to the show, Jim.
Thanks for having me, Bill. Great to be here.
So I'd like to start with a question to sort of set the grounding for our listeners. Toyota AI Ventures, in a couple of sentences, what is it? What does it do? Where does it sit within Toyota? And what is it trying to achieve?
Sure. Toyota AI Ventures is Toyota's first dedicated corporate venture capital fund. And our mission is to discover what might be next for Toyota. And we do this by investing in early stage startups that are working on disruptive technologies, business models, and they're bringing these models and technologies to market. And so we envision this world where humans are amplified by these technologies, and Toyota really wants a front row seat to this disruption. And so we were founded in 2017 with $100 million. We added another 100 in 2019. And we do early stage investments in artificial intelligence. Obviously, it's in our name, but also autonomy, mobility, robotics, data, and cloud technologies as well. We have 38 companies in the portfolio since our founding in 2017. So we're very much structured like an institutional venture capital fund. We tend to move pretty quickly. We are very founder forward, and we're having a great time and investing in amazing companies.
Great. So where I'm excited for this conversation to go is when I talk about thought leadership, it's about peering around the corner into the future to see what's next in terms of a risk or an opportunity, and then bring that idea back to today to take actionable steps, right? It's about taking ideas to scale. And I think there's a resonance there with what you're doing on the venture capital side. So when I think Toyota, I think scale, right? And sort of global enterprise scale. And then these startups. How do you think about this process in terms of taking an idea to scale?
Yeah, I think that startups are, as I said, these great experiments that are happening in the marketplace. And they often begin with a great idea, great technology, a lot of hustle to sort of prove out, is there a market and is there a fit for this product that's wrapped around this technology? But then once you start to mature, then scale issues start to be more and more important. And I often kind of frame this in two parts. One is you have to be real. The business, the technology needs to be real. But once you've proven that, which is a prerequisite for the second part, is how do you build a machine that can actually scale? And I think about the machine in the broadest sense. That machine could be a product development machine, but there's also a sales machine and a human resources machine, a customer service machine, because that's how you really put enough process in place to reproduce and grow the success that is built around this core competency. And startups are along that trajectory of taking this early capability and wrapping these machines around it. And it's really interesting where you see the failure modes where certain companies will build up a machine around where they're most comfortable, but won't build the machine around where they are less comfortable. And we always counsel, because of my own history, is you must find balance. These machines must be balanced, or else they don't scale. And so that's an kind of important alchemy to get right.
I want to pull something in from your background because although you're the founding managing director of Toyota Adventures, you started out as a rocket scientist. And so when you talk about building machines and failure modes, right, I think that's some of that language coming forward. So give us a little bit of your story of where did you start and how did you become the founding managing director?
Yeah, well, it wasn't a straight line, I will tell you that. And it wasn't preordained nor predefined. I started my career. My training is in electrical engineering. My first job at a school was launching rockets for what's now Lockheed Martin. So upper stages, boosters, space station Freedom, mostly in avionics. And I got my first, and it was just so much fun to be right out of school. Launching 300-foot boosters was just an incredible experience. I couldn't spend enough time at work because it was just so much fun. And I learned a lot about systems, control systems, general system concepts. But then I had this real itch for entrepreneurship and young companies. And I realized that a lot of these system concepts, linearity, nonlinearity, time constants, impulse response, really apply to things that were not just engineered systems. I come from a long line of doctors. My grandfather
Mm-hmm.
was a physician, and my father was a physician. I broke their heart and became an engineer. And they thought I'd be driving a train, and I had to define what engineers did. But what's really interesting is they're both internists. They were both internists, and which is really the biology of the whole system, right? The human body as a system. And I thought I was taking this tangent off to a new field, and I find myself they were medical systems people, and here I am, an engineering systems person. And so many of the concepts are similar. And I recognize that even outside of physical systems around small companies, even some of my later work that I did in privacy, and now in investing, really are systems, and they
Mm-hmm.
have their own dynamics. There was a great example I like to use, which is I was at a few companies back. We were doing typical A/B testing to try to get conversion higher on this site where our products were being served, and the data scientists they had all these theories about, well, just change the color or make the description shorter or longer, and everyone had an opinion. And I said, how do we even know what kind of system we're dealing with? Do we think the system is so sensitive that if we just change the color, our conversion rate would rise? Or if we change the verbiage, our conversion rate would rise? What kind of system are we working with? Maybe we have to change the entire product in order to get our conversion rate to rise in really dramatic ways. And it reminded me about impulse response. What is impulse response? It's hitting a system with a hammer and seeing how it moves. And when you hit, say, a skateboard with a hammer, it jumps. If you hit a battleship with a hammer, it doesn't really move at all. And I tried to convey that to these data scientists. I said, we don't know, are we dealing with a battleship or a skateboard when we're making these changes? And I think it's so helpful to calibrate your behavior and your actions to the kind of system you're working with. And I don't care what, in the case of privacy, it's they're legal systems, but every endeavor has some sort of system dynamics you must understand in order to get the behavior you want.
So let's dwell on that for a minute. And I want to push your metaphor a little bit further with the
Yeah.
hammer. In some ways, the hammer is like an idea, and the startup's a skateboard, and an organization such as Toyota is your battleship, right? Where
Sure.
they have different abilities to flex and respond to the idea. But like you said, process in the startup is often minimal and bare bones and built reactively. And
Mm-hmm.
sometimes, like you said, that you build strength in process in a startup where you are already strong and you try to avoid those things which, yeah, they're necessary, but that's not our core competency. and you let it go, right? And so you wind up getting some muscles that are vastly overdeveloped and then some which are almost atrophied, right? On
Mhm.
that.
Yeah.
So let's talk about that that bridge between the two, between the startup and the global enterprise. How do you, because from an investor perspective, there's smart money where you're taking an active position in and trying to help them be successful. And then there's purely passive money where you're saying, hey, you got a good idea. I'll plunk some money down. I want a return, right? How do you create that bridge between the two worlds?
Yes, that is the most important question of how startups become successful companies, and understanding how much process at what stage. Too much process too early is a big waste of effort. Not enough process later undermines growth and customer confidence and partner relationships. So it is really about understanding the stage you're in. And so what we do at Toyota AI Ventures is we do engage with the startup. We are not passive investors. We get in very early. We are, as I said, founder forward. So in our world, the startup is the customer, and we really respect the startup because that's where the innovation happens. That's where the value is created. I think many corporate venture funds get it backwards. They think the corporation is the customer. This actually, in our world, the startup is the customer, and the startup is the one that needs the attention. And so it's really important to give them the resources to be successful. So what we do after we close an investment, we have a team called the portfolio support team that certainly helps the startup with things like recruiting and product development and fundraising and marketing and PR and things like that. Certainly gives them advice on product market fit should they want these things. We don't thrust ourselves on them. I think corporations should not bear hug these small companies, but
Because you can
they're often,
smother, right?
oh yeah, yeah,
Yeah.
and I
Yeah.
think big companies don't understand that startups are not just small versions of big companies. They're
Hmm.
actually quite different. They're like stem cells, right? They could become almost anything,
Exactly.
uh, and so you have to respect that, and you have to sort of let them pull you in, and not just assume that they're going to want your help. And so we have our portfolio support team, and their job is really to impedance match with the needs of the startup, help them to grow those processes that they need at the right time. A seed level company, seed stage company, doesn't need the things that a late Series A or Series B company needs. A seed stage company really needs help with recruiting and establishing the right intentional culture, company culture. They need to find customers that find value in their product. Much later stage, it's really about scaling, as you mentioned, and growing the customer base and finding adjacent markets that where they could really grow their top line, proving their unit economics. So the later stage investors will understand, okay, this is a company that has de-risked the enterprise, and is now in a place where investment dollars more readily translate to increased enterprise value. Where in early stage, that's not the calculus. The calculus is survival and understanding where their product fits into their market. And so we have a team. Probably half our team is actually focused on supporting these startups directly in Toyota AI Ventures, and then we have a whole set of folks that understand how to plug into Toyota. Toyota has 370,000 employees all around the world, many operating companies and business units, and they have deep understanding of Toyota, certainly much deeper than my understanding of Toyota, because every day I learn something new about Toyota, and they help plug in the companies where appropriate. And that's incredibly valuable, both to the startup and ultimately to Toyota.
Can you give an example of maybe a portfolio company that's gone through the journey? And let's start with the underlying idea of the company and then talk about how they came into the world of AI ventures and sort of that journey to date.
Yeah, the probably the best example is probably Joby Aviation, and the reason that's a good one is because much of their journey has recently come into public view, so I can speak about it more openly. In August 2017, we had we had only been about a month into our first fund. We had just gotten approval from the Toyota Motor Corp board of directors, making our first few investments. Joby came onto my radar. And for those that don't know, Joby is an all electric takeoff, vertical takeoff and landing vehicle that is targeted at urban mobility, basically air taxis. And the mission and vision of the company is to save 1 billion people an hour a day in their commute. And
And that's a big
the com-
idea right there,
it's a
right?
huge idea. It's a
Yeah.
huge idea. And when I saw the company for the first time, and they're out in the Santa Cruz Mountains, and they took me out to this rock quarry where they were doing flight testing, early flight testing, full scale early flight testing, and the vehicle just blew me away. It was highly redundant. So safety is, job one, right? If you don't get safety right, nothing else matters. So it was redundant in rotors and battery and redundant systems throughout. It was quiet. If you're going to have air urban mobility, noise is hugely important, and I couldn't even hear the vehicle at about 100 meters at all. So I said, okay, this is really interesting. And they also had a service around it that was targeted toward the general public. It wasn't an elitist helicopter service, right? This was
Right, right.
going to be competitive with ride hailing or ride sharing mobility. So I was like, wow, a great vehicle, safe, quiet, and accessible to a big market. And they had the DNA of the company, had great service chops as well as great aviation chops. So I come back to, I'm very excited about this. And I go to my board and they're like, Jim, there's no AI in this deal, right? There's no artificial intelligence. And this is one of your first deals. And do you really want to go to the mat for this? And for me, it was just such a no-brainer that if Toyota, if this was the flying, if this was going to be an air taxi, if this was going to be a flying vehicle, Toyota had to be the one that was going to manufacture this. And if you looked at the number of the vehicles they were going to have to manufacture in a year, only an automotive company could meet those volumes. An aviation company could never meet those volumes. And so it had to be. And who's the best manufacturer in the world? Toyota. So
Hmm.
I really had to pound the desk to get this deal done, and we did. We got in the Series a note at that time, and we just continued to work with the company. A year later, we brought some executives from Japan to the same rock quarry. They got as excited as I got a year earlier. They started to dig in like only Toyota can in a huge way, learning about the company, giving the company some early value on how to think about manufacturing at scale with the quality and safety orientation that I'm so proud that Toyota has. And then in 2020, last year, Toyota led Joby's $600 million financing, Series C. And then just recently, Joby announced that they were going public through a special purpose acquisition company. It was Reinvent Technology Partners, which is Reid Hoffman's SPAC. And they'll be public probably before the end of the year, maybe as early as this fall. And so there was all this working with the company to, for example, a Toyota executive is very sensitive to, as I said, safety. And
Hmm.
if you look at many early stage startups, they're really about engineering and workbenches and prototyping. And having toured many Toyota manufacturing facilities, they are immaculately clean and incredibly uniformly run.
Hmm.
And you go to an early stage startup and, it's not so clean. It's not so
Right,
uniformly
right.
run. It's a prototype, a factory in many
And it may be
respects.
held together literally with duct tape and baling wire
That
as needed, right?
as needed, right? And so there comes a time, and it wasn't during that first year, but it was soon, about a year after we invested, that we had some sit downs with the executives saying, hey folks, this model has served you so well to now. But it's so important that you kind of turn the corner toward that next era of your evolution of really being focused on reproducible processes that are standardized and focused on creating the kind of quality at scale that you're going to need to be successful. And I think having the gravitas of a Toyota, the world's greatest car maker, really resonated with the company and the executives. And I think it set them up very well because they listened so intently. And that's the hallmarks of a great startup team, is that they listen so carefully and are humble enough to understand what they don't know, that they really up their game. And by the time we brought the Toyota executives from Japan to visit the company, it was beautiful. And it wasn't just a dog and pony show. They had really embedded these ideas into their culture, which I think is paying dividends now, and I think will continue to pay dividends in the future. So this gets to your point, Bill, about scale. Is if you're going to scale, of course, you don't want to bring that orientation too early, because then you wouldn't even have the full scale prototype vehicle that I witnessed in that morning in the August 2017. You needed that kind of prototyping approach to the problem. But as the company matured, you have to strengthen the muscle around standardization and quality and reproducibility that's so important to manufacture at scale. And I think you see that over and over again in startups. What is the right time to build up this muscle? Too early, you waste effort and money and resource. Too late, and you miss out on opportunities and potentially undermine your own business growth.
Well, and I think this fits beautifully with the growth of an idea, right? Because you articulated for Joby, taking and saving a billion people an hour a day, right? And that vision, someone has to put it on the table and say, how are we going to get there? You can't do that just by incremental improvement. But at some point, there's that transition. What I love about your story is the thought leadership that Toyota developed in manufacturing over a century, right? And Toyota production methods and quality, they can anticipate. And this is almost a two-way looking around the corner. You've got the startup looking around the corner to a future and saying, we could do this. And then you have Toyota looking around a corner and saying, and here's where you're going to get into trouble with scale. We need to set this up now before you have heartburn. And instead of serving a billion people, you serve 1,000.
That's right.
If you are enjoying this episode of Leveraging Thought Leadership, please make sure to subscribe. If you'd like to help spread the word about the podcast, please leave a 5-star review and share it with your friends. We are available on Apple Podcast, Spotify, and all major platforms, as well as at leveragingthoughtleadership.com.
And I think the tenets or the dimension that I always like to look at leadership is really three. The where, the what, and the how. Mm-hmm. Where are you going? And JoBen Beavert, the founder and CEO of Joby, he knew where he was going. He was going to save 1 billion people an hour a day. The next question is what? What path will take you there? You know where you want to go, but there are many strategic paths to take you there. And you have to optimize across those paths. And then the last dimension is how. How will you execute? How will you execute along that path? And I think if you decompose those dimensions and execute them or resolve them at the right time, because I think you always have to struggle with these questions. But at what point do you decide to focus on them? Reid Hoffman says, you got to let some fires burn, that are not that important, especially in a startup. And then at some point, you got to deal with those fires. And I think that's the art of entrepreneurship, understanding when to let certain fires burn and turn your attention to things that are imperatives at the time, but not losing your ultimate objective, your optionality on the paths that'll take you there, and the resources you have to execute. That's the art of leadership, in my opinion.
So using the where, what, how framework, I'm sure you get and experiences pitches from many startups. Are they
Yeah.
equally clear on where, what, how when they're coming in? Or what do you see in when you're looking and saying which ideas are going to work and which ones aren't? What sort of criteria are you looking for on
Yeah.
ideas that are scalable?
Yeah. I think that's the conundrum that faces every venture team. How do you separate signal from noise? How do you look into the future? We have the luxury of being an early stage company, so I always like to think about venture capital as a view to the future. Early stage venture capital is a telescope into the future. Late stage venture capital is a microscope into the near future. And so when you think about it, when we invest, we look at, of course, great teams that are resilient and have that important alchemy between humility and confidence. Not too much confidence that it's arrogance, and not too much humility that it's insecurity, but enough of a balance and a culture that kind of has that kind of curiosity as well as courage to execute. But then that's what they can control, and the products and technology they bring to the market. The big things that they don't control always worry me, and that's where you separate, I think, signal from noise. Is
Mm-hmm.
what do the markets look like? Are they big and broken markets that are accessible? That's the kind of markets that we like to see investments play out. I never want to, and I have some scar tissue around this. You don't want to be in a room all by yourself. You'd much rather be in a crowded room, but with a lot of noise. You're going to have a lot more fun there. And the markets are the same way. I'd rather be in a crowded market than a market that is small and you're the only player.
You
And so
don't
I
want to
think
be the only boat in a blue ocean. You want some other people out there with you, red ocean
exactly,
almost, right?
exactly. Even if I
Yeah.
got to fight them for resource, I
Yeah.
think
Yeah.
that's important. And so then as you move into those markets, you kind of look at what resources do you have to win in those markets. The only unique superpower a startup has is speed. And so speed is incredibly important. And so we look at, the team, the product, the market, the opportunity, the unfair advantages the company may have is important. And then, have they done it, or at least do they have an appreciation for building the machine they're going to need to scale? I give this talk where I talk about organizations where people always lay out their organization as a tree. I think that's a terrible way to lay out an organization. I believe organizations are stacks where the core competency is at the bottom, usually research in the case of a tech company, and then engineering is on top of research. They talk to the researchers a lot, but above them are the product people. And then above the product people are sales and marketing and customer service. And it's a stack. And where depending on where you're sandwiched in the stack, you tend to have the highest bandwidth communication. So the product people tend to be sandwiched between marketing on the top and engineering below them. And so there tends to be very high bandwidth communication there. And that's where you can really build out these really strong systems, machines that can really help you scale, because there's very clear goals, right? The where you're going is very clear. If you're a customer service organization, you know what your metrics are. You need
Mm-hmm.
to serve the customer. Your net promoter score needs to be high and moving higher. If you're about engineering, it's about robustness and meeting the product manager's roadmap. Research is about breakthrough innovations that can be engineered into products that can be sold to markets. And so that's what we look for. We look for these important technologies that can move into markets. I'll say one more thing. Ray Dalio has this great articulation of productivity tends to move linearly on a ramp over time, right? Productivity
Mm-hmm.
rises over time linearly. On top of that is a hype cycle. Is this, he calls it really the credit cycle. In the tech world, it's really a hype cycle, uh,
Mm-hmm.
and that rides along that productivity linear ramp. And I think hype is generally good. It sucks in talent, it sucks in venture capital, and it gets us to the solutions much more quickly. In my control systems background, the fastest transient response is an underdamped transient response that overshoots its target and then settles into a steady state. And a hype cycle looks like a lot like that. It sucks in quickly a lot of resource, It overshoots, of course, and I know the press loves to deride the hype cycle.
Yeah, the
Uh,
trough of disillusionment.
right,
Everybody loves to dogpile on it during the trough,
it
right?
does, but
Yeah.
but that's part of part of the of finding that plateau of productivity, right? Um,
Exactly.
right, and so it's a good thing. And so, and from an investor's perspective, you only get in trouble if you buy in at the peak, right? So, if it overhypes and then comes down, it only matters when you buy and when you sell. So I think that but for the long run, and how you never want to just buy on a hype cycle. You want to ultimately see, is this going to really produce higher productivity over time? And that in many respects is our North Star, to say, is this really going to develop into something that delivers productive value to the society? Because if it does, then it's only a question of feasibility and timing. If the feasibility is there and the timing is right, we're going to do fine as a venture fund, because we're patient. Venture capital generally is a patient asset class. Toyota is incredibly patient, and I
Hmm.
couldn't be more fortunate. Although we have a 10-year fund and those kind of venture capital imperatives, but we're pretty patient. And long as we see that this will create productivity, we feel like we good things will happen over whether a hype cycle comes or not. And that helps us separate wheat from chaff, signal from noise.
And I think that's a great sort of framework to use on ideas, whether you're working within an organization and trying to take an idea to scale outside of the organization, or to bring a new idea into an environment that's going to be disruptive, using a Clayton Christensen sort of model there.
Yes.
My question for you, you talked about speaking. You do some thought leadership work yourself, writing, speaking, teaching. Can you tell us a little bit about that?
Yeah. I guess I have enough scar tissue now to be relevant to others. I never set out to. I love teaching. I love coaching. This the best thing about this job as Buffett said, I skip to work every day. It's just great to sort of listen to younger people, and kind of hear what they're struggling with, and at least give them a framing with which to approach them. I think I certainly write, and I speak about these issues mostly around being a generalist, right? I had this series of blog posts about me being the accidental chief privacy officer. I spent a bunch of time in election systems, if you can believe it, back in the early 2000s, and I learned a lot about the privacy community, and then found myself being a one of the few chief privacy officers at a company, a data broker company, and I'm not a lawyer. I used to hang out with lawyers then a lot, and I brought the technology perspective to this. But I brought my same little systems toolbox, right? Of, okay, what's the system here? Oh, it's a legal system. Okay, what are the
Mhm.
principles that the law is trying to encode to make sure people have agency in their lives in the context of all this technology around us? Now I find myself being in this venture capital world, also accidentally, by the way, and I have my same toolbox of systems tools. And so I give this talk around being a generalist, and the framing I love is geeks, suits, and wonks, right? That there, if you any technology enterprise has geeks that are the technologists, the business people, the suits that are bringing it to market, and then the policymakers and the attorneys and the journalists, what I call, for lack of a better term, the wonks, that try to make sure that this technology is brought to market for the benefit of the society. And oftentimes, because I think ultimately that's how it lives the test of time, is if it's fundamentally good for the society. If it's not, it will be very short lived. And so I think those are important principles, no matter what line of work you're in, which I know is a really broad based statement. But I
Mhm.
think, at least in my career, it's kind of proven out that you see these commonalities. And if you're open to the serendipity of your career, these principles can be applied to almost any endeavor. And at least I found that in my experience. And I really have never. I'm always curious and a little impatient and always open to kind of going into a new career. I mean, I used to tell startups until about a couple years ago, maybe, I had actually sold more startup equity than I had bought. Right. So I'm
Hmm.
new to this, right? And we'll see how it turns out. I mean, so far Toyota, so far it's working out pretty well. And Toyota has been, incredibly generous by giving me this opportunity and giving my team this opportunity. But it's those same kinds of principles of proving your competency and demonstrating your relevancy to an organization. I don't care what that is. You got to go deep enough to be competent. If you're not competent, no one wants to talk to you. Okay.
Well, and this goes to your point as the founding managing director at Toyota Ventures, right? Where you had the idea and brought it forward. And so you had to be able to work that idea within the organization to say, yes, this is something we would do. So my question to you is, because there are multiple audiences for thought leadership, does
Yeah.
Toyota AI Ventures itself have a thought leadership strategy? And if so, who owns it and how does it play out?
Yeah. We don't have a thought leadership function, say. And I actually don't, I'm not, I haven't seen that work where thought leadership is sort of siloed off. I think I always tell my startups, owns sales. Everyone should be selling at a startup, from the CEO all the way down. I think all leaders should be thought leaders and encourage that. That's why it was so great that you invited me on your podcast, because I think thought leadership is not it's a team sport.
Absolutely.
And I think it isn't just strategy, right? It's sort of the clarity of vision, the wisdom of the strategy itself, and then the kind of the courage to execute it. And for us, our job really is to demonstrate to Toyota, this venerable 80-plus-year-old company, how startups are conducting innovation and changing the world in really unexpected, disruptive ways. And it's not easy. I mean, when you mentioned Clay Christensen, the innovator's dilemma really is quite relevant to companies like Toyota, where they've been incredibly successful. But what does that next era of success look like? And much of the company doesn't really understand what we're doing by investing in these startups. I mean, they're starting to now, right? It's been
Hmm.
several years, and they're starting to see it. But early on, they were like, "What is this? Why are you doing this? They're not selling cars."
Well, if
Um,
you've got a billion customers, around the world who the job to be done is they want to save an hour on their commute,
mhm.
then that requires different thinking.
That's right. That's right. And it's our job to sort of sit on the semi-permeable membrane between the startup community, where the crazy disruption is happening, and the internal Toyota culture of 370,000 employees that are focused on designing, building, and selling the best cars in the world. What does the next chapter look like? And the great thing about Toyota, which I was very surprised to me, is that there's a lot of entrepreneurial juice, especially like at the top of the company. I mean, Toyota pivoted from industrial looms, textile equipment in the 1930s to cars. And
Hmm.
that pivot worked out pretty well. And that entrepreneurial juice kind of still exists in the company, which I had no idea. And I was incredibly pleasantly surprised. So this hasn't been completely foreign to the company, but it requires a level of curiosity and courage, as I mentioned earlier, to kind of bring it to the business units and show it to them in the context that they understand, in order for them to see the value of it. And that it doesn't have to happen in one meeting. I often say, when I'm having meetings with business units and they kind of give me, pat me on the head and try to send me on my way as being irrelevant, I say, look, we'll keep talking,
Hmm.
and we'll keep moving this ball forward. And more, you see groups around business units all over the world kind of recognize that what we're doing is at least intriguing, relevant, and ultimately valuable to their business units. And that ultimately is incredibly powerful for Toyota, and I think vital to the transition that Toyota and any large company must go through as they figure out the next era of their success.
Well, and you key in on repetition. And I think that's a fundamental thing. You can't put an idea into the world once or tell someone once and think that they're going to lean in, fully embrace it.
Mm-mm.
There's a journey between making them aware of a possibility, getting them engaged and curious, and then finally activated.
I think it gets back to that machine, right? You build the
Yeah.
machine, and what are machines good at? Repetition. Like when our investment machine, I told my team when we started in 2017, this team has two goals: pick great investments and build an investment machine that is predictable and understandable. And we do that. I mean, every investment, we run the same process. Everyone understands what is expected. Our business units and folks around Toyota understand this process. They understand what the goal is, what the process is, and we just keep stepping and repeating. Obviously, the companies are different and the industries are different, but the machine is the same. And to your point, repetition is incredibly important to education.
So, Jim, I want to thank you for joining us today on a conversation on the intersection between thought leadership taking ideas to scale and venture capital taking ideas to scale. I have a question for you. If someone wants to learn more about Toyota AI Ventures, where do they go?
Yes, and thank you, Bill. Our website is toyota-ai.ventures, and please check us out. We're on Twitter as well and LinkedIn, so just search for us there. And if you're starting a company, we'd love to hear from you. And as I said, Bill, this has been a pleasure.
Thank you very much, Jim. If you've enjoyed this episode, please join our LinkedIn group, Organizational Thought Leadership. It's a professional community where thought leadership practitioners talk shop about our field. So if you're someone who creates, curates, or deploys thought leadership for your organization, then please join the conversation in the Organizational Thought Leadership LinkedIn